Hey everyone, welcome to the 10 Investor channel. In today's video, we're going to look at a very interesting stock which literally everyone has given up on, but is looking very beautiful from a technical perspective and has probably made a very long-term bottom. Now, this stock has not given any returns for the last decade or so and is looking excellent. Along with this, we're going to look at three other stocks. One stock which was listed recently in November 2021 and it has been in a continuous downtrend, but it's looking excellent after a long time. And two other stocks which are fundamentally very good, one from the defense space and one from the finance space. All four stocks can be chosen for investment or even for trading purpose. So you can decide how you want to do it. But having said that, I'm going to also start with the Nifty Outlook first, and then we're going to look at these four stocks. So do stay tuned till the end of this video, especially for the stock, which is going to be a dark horse that we're going to discuss today. Okay, so let's get started. So as always, we're going to look at Nifty Outlook first, and Nifty Outlook for this week is not very great. Now, I know I said I was bullish last week, but I was completely wrong. Now, you need to understand technical analysis is always a probability. And we can go wrong sometimes, we might be right sometimes, but when we're right, we just need to make more money than how much we make when we are wrong. That's all we have to know in technical analysis. But for this week, Nifty is looking bearish, but we are at a very crucial support zone. Now, here, if you look at this chart that I have, Nifty is actually around that previous support zone, around the budget lows that we made. We are back to that zone now, and I think we probably might reverse with a caution. If we don't reverse, then we are probably heading toward the next support zone, which is this major support zone over here. And for me, I think that should be a very strong support zone. If we don't reverse from here, then definitely we're going to reverse from here. Now, with this in mind, do ensure that you don't go very heavy on your positions. Observe where Nifty is heading to and stay with strong stocks. Do not stay with weak stocks because they might keep falling even if Nifty reverses. So stay with strong stocks, and we're going to look at these stocks today as well. Okay, so overall, sector-wise, almost all sectors are looking bearish except FMCG, IT, and the public sector index. Otherwise, there are select stocks which are looking good. So follow those stocks and try to be with those stocks. Okay. Now let's take also look at the small cap index, which I posted recently on Twitter. Now, small cap index is actually trading in a rectangle consolidation zone. Now, this is kind of a 5-month long consolidation, and small cap index has been trading in 10% range. And because of this, small cap stocks or broader market has not been performing because most of the stocks have been correcting or going sideways. Okay, but below 9,100, which is this major support zone, if we correct below that, then we're going to see a sharp correction probably towards levels of around 8,200 levels or even below 8,000, which is this support zone over here. Okay, and if we do that, then that's going to be pretty bad for the overall markets. And for that reason, I think we might reverse and probably head higher next week. This is looking like a very bearish chart for me because after this strong red candle we had here, we had just 1 week of strong reversal, but otherwise the small cap index has been looking very weak. Okay, so as I said, don't go very bullish on your, don't go big on your positions, don't invest all your money, keep some money aside, go little by little and see how markets work, and then add more if you want to. Okay, so now let's take a look at the four stocks that I said that we're going to discuss today. The first stock is Policy Bazaar. Now, most of you know this stock was listed back in November 2021, and since then the stock has been in a clear downtrend. Right now, if you look, the stock has just been going down and down. But since November last year, just a couple of months back, I think somewhere on the results time, we had this nice doji forming with massive volumes. We also had some good volumes the previous week as well. And since then, we kind of formed a base, and now we had a breakout 2 weeks back, and now we get retested, and now again we are heading higher. And for me, this looks like a clear trend change in the stock, especially given the markets are weak. This stock has been doing well in spite of being in a very strong downtrend. So for that reason, I think the stock might head higher from here and might give 30-40% returns in the next couple of months or so. If the markets remain strong, we might get it even faster. But if the markets remain weak, we might take a few months before we get that returns, which I'm talking about here. But the most important part here is the volumes have been excellent in this base formation here. Also, CCI has been very bullish, and Rate of Strength also is looking very good. And I think we might head higher going forward. Now, I'm going to zoom into this area to show you what exactly happened on daily charts because that's very interesting. Now, this was the bottom that I talked about. I think this was somewhere on the results time. Exactly, I'm not sure what happened here, but we had some massive volumes coming in. Then we had some kind of correction, and again, green candles here, and then we kind of took off and reversed from the previous pivot zone over here. And then we kind of again took support around the zone, and now we had a strong rally last week, and now we retested that zone and we are heading higher again. So overall, the strength, as I said, has been excellent, given that we have been having a very weak market overall, but this stock has been doing phenomenally well. Now, any dips towards the levels of 480 can definitely be bought into, and I think the stock has made definitely a major bottom, and we might see some good returns going forward. Even from investment perspective, you can consider the stock. So you're going to buy the stock at current market price, but a stop of around 500, which is this zone over here. Now remember, this is from a trading perspective. Now if you're investing, then the stop can be somewhere around this level also. Now, which means you might have to go with a smaller position, probably 2.5% position size, and then you can buy more if you want to buy, right? But overall, I'm looking for targets of 800 as a first target. But if you're investing, try to ride trends, and you might get much higher levels as well, probably all-time high levels of 1,500 as well in the next 2-3 years if the company does well fundamentally. Okay, so that's the first stock for today. The second stock is the most interesting stock for me today because I think that this stock has formed a major bottom, and that's SpiceJet. SpiceJet has been listed in market since 2004 2005. For the last 17 odd years, in fact, for the last 15 17 years, the stock has not given returns for investors, and I think that time has now over mostly. Okay, now take that with a caution. Don't go just invest all the money just because I'm saying this. Reason why I say this is because there was a massive rally since 2004. We had a massive rally, and then the stock went into a massive consolidation. And kind of reversed from here around 2014-15 levels of 2014-15. We kind of had a crazy rally towards 150 from almost levels of 10, right? And then we again went into a multi-year consolidation, and now we are reversing from that trend line support. Now, I might be early by a year or so here, so we might probably go into consolidation for the next few months or so. But I think probably 2023 is the last year where you might see SpiceJet around the levels of 30-40 levels. Okay, so reason I'm saying is this trend line here, if you see, there is some wick visible here. If I extend that trend line a little bit down, we might go sideways for some more time, for a year or so, or maybe for 2 years or so. But I think it makes sense to take a small position size in the stock and look for targets of at least 60 odd levels in the next few months. But overall, in the next 3 to 5 years, I think the stock can head to 150 levels. Now that's almost, we are right now at 40, it's almost 4x from the current levels. So we might see 4x kind of returns in the next 3 to 5 years if the overall aviation sector does well, and if we have a breakout from here. Now remember, if the breakout does not happen, we are not going to see levels of 150 levels. First, we need to hit 60. Once we cross 60, then probably we're going to see 150 levels. So unless 60 is crossed, don't go over bullish on this sector or the stock, and stay light in the positions. Probably don't go beyond 5% of your overall portfolio if you're investing, and try to keep your losses always, minimum. So as I said, it has reversed from a major support zone. If you see, this was around the COVID lows we had. The stock went all the way up and kind of corrected all the way down back to this level. Now, COVID lows are a major support zone for many stocks. Now, remember that low was a panic low, and I think we should not be breaking that lows. If we break those lows, then we're going to probably head much lower for any stock, not only the stock, for any stock for that matter, right? And what has happened this month, if you see, in the month of Feb, we had a strong bullish candle. We are having a very strong bullish candle, and for the last few months, we have been consolidating, and monthly candles is just kind of, like a sandwich next to each other. So overall, that's why I'm seeing a major consolidation, a major bottom around the zone, around these levels, and I think we might head higher. Now, zooming into the daily charts, now this is what happening. We had a crazy move from all those levels of 30 to 50 odd levels, and then we kind of went into a sideways consolidation. And now again, we are seeing a spike around these zone, and this also is a trend line breakout. And the volumes have been very good. Also, the company reported decent results, I think, recently, and now the stock is heading higher. Okay, so overall, you can buy the stock at current market price around 40 levels and keep a stop loss of 32. Now, if you're investing, try to wait for the monthly close because your positions are going to be small. But if you're trading, strict stop loss around 32 levels. But if investing, you can also add around 30 levels. So 30 is a very, very strong support zone. Now, with that in mind, I want to keep a target of 60 as a first target. And then if we cross 60, then that means we are breaking out from this crazy downtrend. And then we might head higher towards levels of 150 or so. Okay, so that's probably my pick for entire 2023 as well from a dark horse perspective. Now, you might say fundamentals are very bad and all of that. Keeping all that aside, I know we do not like stocks which have not been reporting good results, but I think a major bottom is in place for now. Okay, the third stock today I want to discuss is Credit Access. This was one of my favorite stocks last year or last year, and the stock has done a beautiful retest on the monthly charts. Now, this is a monthly chart that I have, and if you see, we had this major support zone over here. Now, remember, this candle over here, this candle over here, and these 4-5 candles over here kind of was a breakout zone that we had and kind of retested this zone. Now, the volumes have been the lowest ever in the last 3.5 years last month, which means selling is almost dried up. And also look at the monthly candles. We kind of had just dojis. There was not a very strong selling candle like this kind of candle here in this entire last 1 year consolidation or so, right? So overall, I think the stock has made a major bottom and we are seeing a very strong bullish candle this month. So this stock for me also is fundamentally excellent. I made a video last year as well. So you can also consider this as a SIP candidate and you can invest in the stock. So that's the monthly chart. Now let's move to the daily chart and see what's happening in the daily chart. On the daily chart, the stock, as I said, has been consolidating since November or since April last year. And this has been a nice sideways consolidation. Now remember, this is a nice sideways consolidation, which means the stock has not been in a downtrend yet. The stock has just been consolidating sideways. It's a time correction for the stock. And I feel the stock has completed this major time correction. And we also had a breakout this week. Now, as I always say, in this weak market, if you see such stocks breaking out with such good volumes, then definitely it is a very good stock to be in and also remain invested. Remember, the company posted excellent results in this quarter, and that's why we had this gap up, and then we filled this gap, and now we are again heading higher. So overall, you can buy the stock at current market price, which is around 1,000. Keep a stop loss of 830, which is around 17%. Now, if you're a swing trader, try to keep your stop loss even much lower around here, right? But I'm being conservative because markets are weak. I don't want your stop loss to hit. So try to remain conservative, keep a stop loss of 17%, and we're going to look for targets of 1,500. And you can also consider the stock as a SIP candidate and investment for a long-term perspective. Excellent fundamentals, and that's why I'm saying it's a very good company even for long-term investment. You can also keep this as a core stock in your portfolio. So that's the third stock. The final stock for today is Bharat Dynamics Limited. Again, I did a video last year when we had a breakout in the stock, and the stock did excellent. But the stock has been consolidating for the last 4 months or so. In fact, it has not broken below the support zone. So we had this crazy breakout with this long week here. And then since then, we are around that zone for the last 1 year or so. So overall, the volumes have been excellent last couple of weeks. Bullish candles in a weak market. Again, relative strength, strong relative strength, and the stock has been doing well. And I think we might head higher also and head into all-time highs if possible in the stock. So remember, the strength has been very, very good, relative strength comparison. It has been very strong throughout this entire 1 year consolidation, and the stock has reversed from a major support zone. Now, this was a breakout. I kind of retested multiple times, and now we are heading higher with good volumes. Okay, so we're going to buy the stock at current market price, which is around 958 levels, and looking for targets of around 1,400, which is 2.5 times the risk that we are taking. Also, on daily chart, if we observe, we kind of had a breakout here, had a good close. I kind of retested that zone. So I think even any dips towards levels of 800 odd levels can be a very good buy. Sorry, towards 900 odd can be a very good buy in the stock, and we might see higher levels soon in the next few months or so. Okay, so these are the 4 stocks. Don't forget SpiceJet. Do let me know what you think about SpiceJet in the comments, and do let me know what you think about Policy Bazaar, because it's recently listed. It's not a profitable company yet, but the company seems to be doing something good because its stock is expecting that probably, and the other 2 stocks are fundamentally good as well. So that's it for today. I'm going to leave you here. I'll see you in another video. Until then, take care, stay safe, and trade safe. Bye-bye.